And in our top business story, with sustainable energy sources and global efforts towards climate change being the main topic of discussion during Abu Dhabi Sustainability Week, the UAE Ministry of Environment and Water launched their second Green Economy Report. The State of the Green Economy Report was unveiled on the sidelines of the ongoing World Future Energy Summit, with the ministry outlining its achievements and the shift towards a sustainable economy. As part of its intended nationally determined contributions submitted during the Paris COP21 conference in December, the UAE plans to generate 24% of its energy from clean energy resources. Meanwhile, the GCC countries had also put forward plans to reduce carbon emissions by 1.2 gigatons by the year 2030. The new report features the national achievements through 6 major pillars of the green transformation and includes the framework for implementing the green growth strategy as well as 10 national initiatives in the field of clean energy. Among the major initiatives mentioned include the Mohammed bin Rashid Space Project to raise the efficiency of urban planning process, policy of restructuring of the electricity tariff, as well as solar energy projects. The new report also highlights the efforts undertaken by the UAE's banking and financial sector. Commenting on the report, His Excellency Rashid bin Fahad, the UAE Minister of Environment and Water, added that the report reinforces the UAE's leading role in green transformation, while it will also assist in devising a roadmap following the agreements in Paris.
UAE always, I think, meeting our targets and meeting our, we are supporter and we are showcasing what development we are doing. We are launching our second green economy report to show the progress as we done in the UAE and to share the knowledge with them, solutions. So UAE always been a big supporter for any global collective effort to reach to combat any global challenges like the climate change, like the water, energy. So they are in the right place to share such a knowledge. Whatever the outcome of the Paris Agreement now, we need to lay down, such a roadmap. It's too early now to say what we are expecting because all parties they have to meet, they have to prepare. This is all preparation for the Marrakesh meeting, the COP22. So we're not going to wait till Marrakesh. We have to work. And this is what was part of the agreement, that we have to meet. We have to have, there is a lot of work has to be done. But the good about the agreement is really touching and addressing that there is a big biodiversity in terms of the needs and the concern for all parties. And this is what makes this, the agreement is important, that it touches on and addresses the need for all nations.
And the National Bank of Abu Dhabi is committing $10 billion in financing over the next 10 years towards the clean energy sector. According to bank officials, it will lend, invest and facilitate this amount in total to projects focused on environmentally sustainable activities to help meet the rising energy demand around the world over the next 20 years, which will partly be met by renewable sources. The financing will be geared towards the wholesale side, meaning that projects must be more than $100 million and fall in line with global green bond principles as set by the International Capital Market Association. This will cover renewable energy, climate change, clean technology, water, decarbonization technology, as well as green infrastructure and real estate. The initial funding will be focused on the MENA region, but there is the potential for a drive later into Malaysia and Indonesia, part of the bank's west to east corridor of opportunities in emerging markets. According to the head of sustainable business banking at NBAD, the lender has identified that there is approximately $640 billion of investment required for renewable energy projects across the west-east corridor. Dubai's economy emerged resilient during 2015 despite the global challenges created by the drop in oil prices, economic uncertainties in Europe, China and Russia, and weak global demand for commodities. This was stated by Dubai Chamber of Commerce and Industry President and Chief Executive Officer His Excellency Hamad Bouamim during the Chamber's annual briefing. Dubai's economy achieved positive results in the areas of aviation, air cargo and tourism, which have grown over the past year, while trading activities remained stable despite the challenges, according to Bouamim. Last year, the Dubai Chamber witnessed more than 1,330 new members on average every month, with the Emirate reinforcing its attractiveness to global investors with the addition of over 16,000 new companies joining the membership of Dubai Chamber, taking the organization's total membership to 185,000. The members' contribution is reflected in their annual exports and re-exports figures, which were valued at 286 billion dirhams in 2015, with Saudi Arabia emerging as the top destination for the members' exports and re-exports, amounting to 105.7 billion dirhams, or 37% of the total. Oil-producing countries will sell $240 billion of international assets this year, mostly stocks and bonds, in an attempt to hold together budgets blown apart by the slump in oil prices. According to estimates from JP Morgan, that sum will come from running down their foreign exchange reserves and sovereign wealth fund holdings. They will also raise some $20 billion by selling government bonds of their own to help cover a current account shortfall of $260 billion. The U.S. Bank also predicts that these countries will sell holdings of U.S. treasuries and other bonds worth about $110 billion, plus $75 billion of equity investments, up from $45 billion and $10 billion last year. The remaining funds will come from liquidating other assets such as cash, real estate, and private equity. These estimates are based on the price of Brent crude oil averaging $31 a barrel this year, sharply down from $53 from last year, which would see producer countries' oil revenues plummet by $300 billion to $440 billion. Brent has tumbled 22% so far this month to a 12-year low of $27.67, thanks to a slowing demand growth and bumper supply. The slump has rocked global world markets and hit the finances and markets of oil producers especially hard.